Mike, let's not talk about this. Let's talk about your overweight on energy and what it means for your view on the US consumer and discretionary at the moment. How does one inform the other?
Well, look, it's self-correcting. This is probably more of a trade than sort of a secular call. I mean, look, energy got killed last year. It was a major underperformer. And what we noticed was that the revision factors were actually starting to turn up. Crude leads revision factors by about 4 months. So this, from our standpoint, this is a call about earnings revisions, not about geopolitical risk. But the geopolitical risk is still there, and it's a nice hedge in case something bad happens in that world. So from our standpoint, it's probably 50% done with this trade on a relative basis, but we think it can carry into the summer. It's a revision call. The oil prices don't need to go up for this to work because crude leads by 4 months, and it's pretty much that simple.
But to John's point, when does this become a tax on the consumer at a time where you do see weakness elsewhere?
Well, I think at oil at these prices is fine. I mean, gasoline at $4 is typically the threshold where the consumer starts to really push back. We're kind of up around that level now. But look, crude has come down in the last week. I mean, we're 83, I think, on WTI. That's down about $6 from the peak. And so that's informing me that we're okay for now. If we were to shoot to 95 or 100, oh yeah. And by the way, as part of this trade that we put on, we are underweight consumer discretionary. Okay, so we think the consumer is weaker for other reasons beyond gasoline prices. We think a good chunk of the consumer is hurting. I mean, this gets back to the comments on the airlines. It really is a have and have not world. Okay, it's playing out everywhere we see. And the consumer right now is being very judicious with their pocketbook. They're borrowing a lot in credit cards, but that's getting expensive, and we're seeing some delinquency action there. Nothing recessionary, but like at the margin, it's just harder to get that dollar to your company. So consumer discretionary is going to be difficult.
In the energy space, what else do you like outside of crude?
Well, within energy, well, I mean, anything that's levered to crude. So basically, and this is an important point I want to make. When we upgraded energy, we said, look, you still got to stay up the quality curve, right? This is not a situation where we think you want to be going down the quality curve to the bad balance sheet. So integrated, some of the higher quality E&Ps, and we mentioned those in the note when we upgraded the group.
And what about gold? I feel like we have to talk about metals.
Yeah, we're still pretty positive on gold because, this gets back to the issue of the fiscal sustainability. And we haven't talked about this yet, but fiscal dominance is a topic we brought up almost 4 years ago. And we think we're in a fiscally dominant policy world. It gets back to, fiscal's too heavy, which is keeping the Fed tight, and then liquidity has to come in and fund that. So at the end of the day, gold is telling you that the markets are starting to worry a little about fiscal sustainability, maybe more than what you're hearing in the press. It also started, if you think about gold, how it's traded relative to real rates, that's probably your number one signal. Real rates have gone up significantly in the last 2 years, and it's kind of a vote against sovereign. I mean, that's what's going on. Central banks are buying gold, and we think it's a really good hedge against fiscal sustainability becoming a problem.
There's one piece missing. It's the dollar weakness that you'd anticipate off the back of those questions around fiscal sustainability. Why is that piece missing?
Because everybody's got the same problem. I mean, tell me a major country that doesn't have the same issue. So all of the currencies are depreciating against gold or crypto. It's the same trade. And by the way, it's sustainable. It's not like the end of the world necessarily tomorrow.
You like Bitcoin?
Well, the market does.
Do you?
I like gold better because I think it has a longer-standing sort of view, or it has a longer-standing sort of history of being a good place to be in this outcome.